presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak Asset Management YouTube update for August the 1st, 2023. I'm Mo Ansari, President of Compak Asset Management and host of Market Wrap, the daily broadcast that I do every day. You can come to the compak.com/media right down here that you see. You can come to that and you can get all the information there. You can download the app, you can listen to the podcast, you can get the weekly newsletter, you can get the YouTube updates. All the information is there, compak.com/media. I'm going to talk a little bit about the Fed, the market, the economy, take a look at the technicals and the week ahead. Let's start with the Fed. Looking at what the Fed is doing, the market is expecting rate cuts in March of 2024. I think the big thing that's going to move the market this month, August is usually not a good month for the market, especially when the market is up 15% or more going into July or going into August. It's been down somewhere around 3 to 4%. So I think we're setting up. Just about everybody else is getting bullish. There's no recession. Everybody is getting all excited. Everything is wonderful. And that's when the market makes a fool out of most of the people most of the time. I think the expectation that the Fed is going to cut rates is way too early for that. I think we could get a strong unemployment number this Friday. And then if that comes out, everybody will say, oh, September's back on the table. The Fed is going to raise interest rates in September. And that's going to cause some consternation. Everybody will be wringing their hands. Oh my God, these are the people who always buy the top, sell the bottom, snatch defeat from the jaws of victory every single time. They can't help it. People who've been in the market. You've enjoyed a nice run in the market. It's been a wonderful year so far. A little bit of backing and filling could be positive. Get some of the froth out of the market. That's what I would look at it. Valuations, yeah, everybody's talking about valuations. If you look at the big fangs or the Magnificent Seven, yes, they're stretched, 28.8. You look at the S&P, 18.8. But if you take out the S&P, these 7 stocks, and look at the S&P valuation, it is 16.6, which is just about the average for the 25 years. So I think what we are going to see is a redistribution. We're going to see a slowdown, or the Magnificent Seven, or the big tech, or the AI, whatever stocks you want to call them, and whatever name you want to give them, the fangs. They're going to sit there, not go down a lot, but not go up a lot, while the rest of the market catches up. We'll see a broadening of the market, and I think that's going to be positive overall. Looking at the economy, inflation, I think it's been coming down, and it continues to come down. But now we've gotten rid of the transitory inflation that comes down quickly. And the persistent inflation, which is, rents and things like those that don't go up and down a lot, that's what is left. So I think the decline in inflation could also come down. The rate at which inflation is coming down could slow down. Again, that'll cause some people to worry, oh my God, inflation is not coming down as much. The Fed will have to raise interest rates and give us that narrative or the excuse for the correction over August and September. I don't know if you're going to see it or not. Corrections are very hard to find. Everybody's been looking for one for the last 4 or 5 months. Haven't found it yet. But we are pretty set, and it wouldn't surprise me. But that does not mean that you should sell everything. What I would do is trim a little, as I call it, pruning and planting. You do a little bit of pruning here, a little bit of planting there, so you might get a shot to pick up some of the stuff that you don't have. Again, August 8th, next week, I'm going to do a webinar, hour and a half, jam-packed with information, all the economic data, all the technical data, and all of your questions. That's going to be August 8th. You can go and register. It's going to be a Zoom meeting. To get that, you have to have an access code to get into the meeting. Go to compak.com/seminars. Looking at the technicals, 4637, still the high for the S&P, is what I'm looking for. That's the high that we made right here in March of last year, 2022. If we can get above 4637, but this is a fifth wave. You see, when you make a fifth wave top, we get an A, B, C correction. That's what we saw earlier on last year when we got back down to the October low. So then we start 5 waves to the upside. Wave 1, wave 2, wave 3, wave 4 down, and 5th wave to the upside. This is wave 5. Once we get to 5, as I mentioned, we get some kind of pullback, and technically that fits in with the fundamental, that fits in the seasonality. Support is 45.15. That's or 16, right about the 20-day moving average. We break that, then we go down here to the 50-day moving average. Weekly charts, again, third wave long term is still to the upside. 46.37 is the resistance coming off this high, the March of last year high. And then we go to the all-time high of 48.18. And if we get about 48 to 18, we can project this from here on the weeklies, and that comes at 5,000 to 51.50. We might not get there until next year or later on this year or whatever, but first we have to get above 46.15, 46.37. And I think we're going to see a correction, but you never know. Looking at the NASDAQ, similar picture, 5th wave top right here, wave 1, 2, 3, 4, 5. Once we get 5, we get a pullback. 16,550 is this high right here that I'm looking at, March of last year. We're very close to it, not quite. We're at 14,650. We're at 14,300 right now. So very close. Support is at 14,050, then 13,695. Right around 13,600 is out of the two, 20-day, 50-day. If you break the 50-day, then things get a little bit messy. If we can get above the March high, this high right here, March of 2022, then we're looking at the projection from here, and this is the Fibonacci number that I'm looking at. The projection comes into 15.3 to 15.7, this band of resistance that I'm looking at right here. The gold market, this is the weekly chart. Again, wave 1, 2, 3. We're going to get a 4th wave pullback before we go to the 5th wave highs. And those come in a lot higher right here. And these are weeklies looking a lot longer. Gold, interest rates are at an interesting point. They closed at 4.05 today. The double top we have from here and here is 4.09. If we get above 4.09, then we head back to this high. That's the October high. That puts us at 4.33. We remember last October what happened. The market came down. So if interest rates break out to the upside, or if we get above 4.33, we break out above here, then we could be headed all the way up here, which is about 5% for the 10 years. That means rates going straight up. When rates go straight up, though, you know what the market does. It doesn't like it. So it just depends if we get the slowdown that we're supposed to get. If we don't get that slowdown, the Fed will continue raising rates. Finally, they'll break something, and it'll probably be the economy and cause a much deeper pullback. So we have to watch these numbers on the interest rates at 4.09 and then 4.33. If we get above that, that'll get me worried about the market. Gold market down big today. Rates were up today big. That put some pressure on the market. 1957 and 1890 are the support areas in the gold market. I would be looking at those where the market is headed. Those are my thoughts. Those are my views of the market for August 1st, 2023. Again, if you need help with your portfolio, give us a call. Come by the office. All you have to do is go to compak.com and set up an appointment. I will sit down with you personally and develop a portfolio, a roadmap for you to get you from where you are now to where you want to go financially. Thank you for tuning in today.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.